in Mexico City. Well, my guest host tonight, Kevin Lings from Stanlib, Viv Govender from Vunani Private Clients. Moving straight on to the Bidvest story, we've got Bidvest Chief Executive Brian Joffe joining us in studio. We're looking at those interim numbers from the diversified industrial. Headline earnings per share rose by more than a third to just over 742 cents. This performance helped along by profit of close to 400 million rand on the sale of 50% of the group's interest in Mumbai International Airport. Thank you very much for your time, gentlemen. Brian, let's start with you. You have been quoted as saying that the South African trading conditions have improved, but sectors such as light manufacturing, construction and discretionary consumer spending remain relatively weak. Do you see some hope on the horizon for those sectors?
Always hope, Bronwyn. Always hope.
I see you in a very positive mood this evening.
Well, you know, I think things in South Africa are definitely looking a bit better. With the government's new infrastructure spend, I'm sure things will even look a little more better.
Brian, can I just ask you, sorry, Brian.
You were fast off the block
because I don't know if I'm going to get a chance to ask this question. In a couple of companies now that we chat into, I would say in the last couple of weeks, we're picking up a sense that their engagement with Transnet is much more positive. In other words, that Transnet is delivering a better service. Are you sensing that from your perspective? I mean, obviously, a portion of your operation does ultimately deal with ports and freight, etc. Do you sense that Transnet is a better place? Just following up from this idea that maybe we get more infrastructure.
Well, Brian Molefe is my boss, so I better say it's all good. No doubt since, I guess, in the last 6 months or so, I think especially the rail part of Transnet has done really well, and I think now there's a special emphasis now on new rail development, and I think that's really good for South Africa. It's good for us indirectly because, of course, we move a lot of products in and out of the port, but certainly I think if the port operations become more efficient with the spend, I think it's going to be good for all of us.
With regards to the dividend, I saw you issued a special dividend in your announcement. Is that because you don't see many opportunities out there in the market? And also, does the new withholding tax any effect on your decision to have a larger dividend this time around?
Well, two things. One is the special dividend is really, to some degree, it's out of the Mumbai profit. And what we didn't want to do was to pay one single dividend, because next year would be measured against a dividend with a one-time recurring profit of Mumbai. So we split the dividend into two parts, one which is the normal sustainable dividend portion, and the other which is the special dividend portion. So that was that piece of it. So
your body language is bothering me.
Sorry,
do you mind not cutting me out of the set?
I'm really sorry. I'm very sorry.
More open body language.
I sense that you're upset that I interrupted your flow.
I was very upset.
Yeah.
I don't want to gloss over this 900 billion rand or 3.2 trillion rand tabled in terms of construction. I have been lambasted for being too negative on the budget. Of course, intentions are there, but do you really believe, Brian, that we're going to see the execution this time around?
We hope. I mean, I think that the intention has always been good. It's always come short in the delivery. So this time around, hopefully, things will happen. I have no doubt that Transnet piece will get delivered. The rest, I must be honest, it's unknown, but hopeful.
Singapore is a tough environment, although Asia Pacific continues to perform well. What's happening in Singapore?
Well, Singapore for us, I don't think Singapore is all that difficult. I think we, in our business focus over there, we're pretty much involved in the supply of protein to the Singapore market. Price of protein, mainly poultry, has come off a bit. So we didn't do as well. I think what's required in Singapore is a slightly different focus on what we do there. And we have been involved in moving that focus over the last 3 or 4 months. So optimistic about Singapore going forward.
Now, gentlemen, silence. You're too scared to ask questions.
Yeah, I can't interrupt this.
I've now ruined the momentum on the desk.
Ryan, if you look if you look geographically, you guys are essentially a global player now. An area that you're not really involved in, from what I can ascertain, is South America. Is there a sense of moving into South America? I mean, you've expanded, if you look at Europe, you've expanded into, let's call it emerging Europe. And that seems to be doing quite well in terms of food services. Would you consider South America?
Well, we have invested in Chile, which we've announced. We're in the process of signing documentation for an acquisition in Brazil, smallish. from which we will start to build. So, yeah, I think South America is an important market. I think we also have, fortunately, some access to Brazil with the World Cup. We, as you know, should know, we have a piece of the hospitality rights in respect of 2014 World Cup. So that will give us some momentum and some ability to enter Brazil. So we're using that, and hopefully it will be the start of something good, hopefully.
And speaking of like international operations, obviously Europe is going through quite a bit of trouble at the moment, and we're seeing some quite terrifying figures in terms of growth rates from the periphery of Europe. What are your expectations for European growth, and how impact do you see that on your businesses in the area?
Look, I mean, the outlook in statistical terms, not all that great, but I think from our point of view, we don't allow our management to use it. We don't own such a big portion of the market that we should really be negatively impacted. The area, the country that we've been most negatively impacted on is Holland. But I think that to some degree it's probably more, or to some degree, a management issue. Because if you have a look at the other countries, even Belgium, we didn't do badly in Belgium. And the UK, which was also classified as being poor, I mean, we did very well in that particular market. So I think a lot of these things boil down to management, mental approach and whatever. So I don't think there's...
You mentioned you could be plagued by management problems in the Netherlands. Does the same apply to the Czech Republic? Or am I putting words in your mouth now?
Well, you are. I didn't say that we have problems and we're not plagued, that I know of.
I stand corrected, sir.
Yeah, I think that we could have done a little bit better with what we've got. I think that's really the issue. I'm not saying the markets were great, but we could have done in Holland a little bit better with what we've done. Czech Republic slightly different. The weather wasn't really in our favor. We have quite a big exposure to ice cream there. So, you can't make up on an ice cream day missed. So, yeah. But the Czech Republic business is good. And will be, it is really good. It's good management too.
Could you turn Europe into an opportunity in terms of potential acquisitions, further acquisitions?
I think one's got to differentiate between the country's economies and corporate Europe. I don't think corporate Europe is in such bad nick. It's not like these companies are in real dire straits. So, no, I don't think that asset availability and asset sales have just all of a sudden fallen into everybody's lap. Prices haven't come down. Interest rates are extremely low. So it's not like anybody's under real pressure. It's the economies and the banking system which is negatively impacted, with corporates on the ground are not in bad nick.
Are you adopting a fairly cautious approach to further investments? I mean, if you think about it, your special dividend really takes a chunk of money and gives it back to shareholders. One could have argued that that's a nice sum of money you could have used for further investment. That suggests not necessarily that you can't find investments, but perhaps that you've been fairly cautious in this environment.
Look, the special dividend, I'm sounding like the Minister of Finance. The special dividend was 285 million, which in the scheme of what we're talking about isn't all that amount of money. So it shouldn't be construed that that was, an inability of us to make an investment. I don't think it has anything to do with that. It was purely, if you take the earnings per share up 37, headline earnings per share up 37% odd, in order to be able to give shareholders a 2.5 times or 2.25 times covered dividend, you add these two together, that gives you the answer. It was nothing, no rocket science there, and no, I don't think that's anything to do with what the future holds.
Speaking of investment opportunities, I mean, obviously, being a global player, where do you see the most growth and the most opportunities at the moment in the world? I mean, obviously, people talk about, Asia, et cetera, but what about Africa? Do you see much of opportunities in Africa at the moment?
I think Africa, and I actually don't discount South Africa. I genuinely believe South Africa is looking a lot better than it has for a long time. Yeah, I think Africa, you're right. I think especially southern part of Africa, Mozambique, Zambia, I think that those zones are looking good. Also one's got to look at the nature of one's activities. We're not in the retail business, so the markets that we can get to, or which could be opportunistic for us, are not all of Africa. There are pockets of Africa that are good for us.
What sectors do you have most appetite for at the moment?
Well, look, I mean, our freight businesses, you're talking about in Africa.
I'm talking about Africa, absolutely.
Yeah, I think that principally the freight and logistics activities are obviously the ones that are likely to be the best in the short term.
And then in the international arena, obviously so many different geographies, but would you say you do have a certain sector bias?
Well, I must be honest, I like Eastern Europe, and we've made other further investments, even though they've been small. We're in Lithuania, we're in Estonia, we're in Latvia, we're in a few of those little pockets, and we're building a little business over there. I like Eastern Europe. I like Poland a lot. I must say that whilst we haven't seen massive growth, and it's not a big number for us, I like Poland.
And is it traction across the board, Brian, in terms of sector bias and in those territories, in Eastern Europe?
Well, we're in food service. That's all that we are internationalizing. I think what we have had in the last short while is a slight shift in that we've now, whereas before we used to call the rest of our business Bidvest South Africa, it's now called Bidvest Commercial. And the reason for that is that we're intending to internationalize some other segments of what we do, both in Africa and internationally.
How do you think the local economy is holding up given the price increases, given electricity, given another fuel price increase? Are you starting to see that pressure in business? In other words, at what point does it become damaging to business, where they have to start to make cutbacks and start to reduce other types of costs to compensate?
Well, I think you've hit the nail on the head. It's obviously compensating with other costs and being more efficient in what we do. We haven't seen massive price increases. I don't think you've seen the price increases in the inflation rate. So what's happening is that companies, I think, are managing better today than they were before.
But is it, when I say destructive, I'm thinking particularly of employment. In other words, where do you think we are in this employment cycle? I mean, the data is suggesting employment numbers have stabilized. We've got some improvement. A concern has to be, I'm talking from a business perspective, that you're feeding all these costs, and what has to give is another form of cost, which is essentially employment.
Well, look, I can talk for Bidvest firstly. I think we haven't had large-scale retrenchments in Bidvest over the last year, so we've managed to keep that in place. But of course, if this continues long enough, and negotiations with labour continue to be difficult, and price and labor and wage rate increases are big, of course it's going to result in layoffs over time, for sure.
Brian, thanks so much for your time. Thanks for joining us live in the Business Tonight studio. Brian Joffe is the CEO of Bidvest. We're taking a short break, and after this we're back at that story with Auction Alliance, which has been in the press for the past month. Bank staff have been named in the so-called kickback scandal. Investec is one of those banks. We're giving Chief Executive Stephen Koseff a chance to respond here on Business Tonight. Don't go away.